Hello and welcome to Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. We have seen very strong results from Nvidia overnight, pushing US markets higher, obviously led by the tech sector. So we've seen gains on the Nasdaq and the S&P. Today, economic data front, we have had services and manufacturing PMI data, mostly out of Europe, with French data, services and manufacturing beating expectations, and German and UK data coming in mixed to slightly lower. This afternoon, we do have US flash manufacturing and PMI data, as well as that weekly unemployment claims data. Let's look at some charts. Where it all starts, the US dollar. Now, at the US dollar, we've talked about this sort of short to medium term trend reversal, which is marked with that inverse head and shoulders. We've had a nice rally. That top was being marked now with that evening star type formation, just that candlestick pattern that we've got circled back. Now, we were looking for a pullback and hoping for a pullback to find some support close towards trendline support, which is actually extended a little bit further. And we do have a bit of an ambiguous picture on the US dollar basket right now. So we have a pullback and we have a strong sell-off, some dollar weakness, but that's been rejected at the lows and pushed all the way up. So for now, I'd be looking at still backing the uptrend, but not being over eager into getting involved. And the way I'd approach it here is just to look at this little pullback here. Just mark it because it does look a little bit like a bullish flag formation. Now, it really does depend on how today's candle closes. At the moment, at the hammer, so it's a suggestion, an intraday reversal of this move lower. I think if you're looking for long entry in that, you'd want to see that candle pattern confirm, and you do want to see that supported by some gains and maybe a close above this channel resistance here, or this flag resistance, this highlighted area. So just above that, and in that situation, then we start looking for some renewed gains. And then you have to use a bit of discretion as to where you'd put your stop loss, maybe below, the body, the low end of this body of that candle, somewhere 103.30. But it does depend on how we close today. But at the moment, we are in the way that the patterns are setting up, the small bodied candles, does look like a bit more of a consolidation and an absolute trend break and a move lower. So we're not sure we want to give up on that short to medium term uptrend that has been in place. But for long entry, we're looking for a breakout of this flag formation. That would be null and void if today's candle does give up the ghost and start closing and trading back below the lower end of this flag. If we have a lower close and below that flag support, then we start targeting move back towards that 102.45, and we'll see how the price manages that level to see what our next steps on that current on the dollar index would be. Now, looking at the euro dollar, we've also obviously a bit of an inverse picture to what we've seen there. We've had that short to medium term downtrend been broken on the upside. This move looks a little bit more meaningful. We've had a strong move up. We had a flag there suggesting further downside. We got a little bit, I wouldn't say that really met expectations in terms of the downside. We've had a sharp reversal. We have closed above that trend line resistance, and we have rallied towards that previous level, which was support, now acting as resistance at 1.0895. Now, if you are viewing this as a trend reversal, know that we are in overbought territory, and the way to look at that from a long perspective would be probably to wait for a bit of a pullback from overbought territory to look for long entry. Now, just noting this 200-day simple moving average, the price starting to whipsaw through that, it's suggesting that a longer-term trend is sideways. And if you are following a trend follower and you're following a longer-term trend, then it does suggest that you could trade in either direction, depending on where we are relative to levels. And so if we've got a reversal of resistance, that might be a consideration to short and target to move back towards 1.0755. But certainly, if you're viewing this as a trend line break, after that move, we'd wait for that price to just tick back and then probably start considering long entry on that. Long entry from current levels might also be considered on a break above or close above that 1.0894 mark. But we're finding resistance there. The price is being rejected there. And if this candle does close closer to the low of the session than to the high, then it could be an intraday reversal, and that would mark the beginning of that pullback. So again, if you're looking for long entry, you'd be waiting for either a pullback from overbought territory back towards support, or a close above that 1.0894. That'll be a bit tricky as to where to put your stop on a move like that. If you're looking for short entry, then we want to see this candle close slightly lower, closer to the low of the session, and we'd be quite conservative on that target back to where we'd also consider long entry at that 1.0755 mark. Now, looking at the sterling versus the US dollar cable. Now, this one hasn't worked out too great. We looked at this range-bound price environment. We looked at this downside breakout, and we had a nice move back to retest. It looked like there was going to be a continuation on the downside. That price has now moved up, and it is trading above that 1.2680 mark. So if you were looking at being short into that move, into this reversal here, then close above that was a suggested stop, so it would be stopping out of that trade. Now, how do we assess this right now? Well, it is a bit ambiguous, but for me, I think it's fair to say that rather than being in a clear directional trend, we have started now to just extend that range. So there's no real commitment to a directional trend. And again, when you're looking at, so we're looking at a sideways range-bound environment. So we resume back into that format of looking at trading between the levels and looking for breakouts and reversals for that particular market, which is cable at this point in time. So if we get a close above this halfway mark, we start targeting a move towards that 1.2745 mark as that next level resistance. And so bullish reversals of support or bearish reversals of resistance are considered for long or short entry. We are unfortunately trading in the middle of that range right now. And so we prefer to see those reversals occurring closer towards the outer limits of that range. Moving over to some indices now. These ones have been working out a little bit better for us. We've been saying, respect that trend, and that longer term trend is clearly up. On the Nasdaq 100 in particular, we've had that strong move up, and we're looking at a bit of a pullback before we're looking for a long entry. We've had a nice pullback there. That pullback has ended more or less on trend line support with this. You see this candle with a long lower wick. And if you look at the green candle relative to the red candle, that's what we call a bullish harami type pattern. And just circle it there very, very quickly. So that is a suggestion that we've pullback has completed. We are seeing an extension of gains, obviously driven by that very, very positive reaction to the Nvidia results overnight. That does start targeting a move up towards 1805, the previous high. If we do start moving above that, then we just use that sort of trend line resistance on as a possible future target of about 18,400. We take each level as it comes. We've had a pullback. We've had a bullish price reversal. That is being continued today, or that move higher. And we are targeting initially that 18,050 mark. Now, if you're fortunate enough to get in early onto that trade, you might consider having your close below either the body of that trade, 17,500, or the lower wick of that, depending on your threshold for risk. That might be a little bit too far considering that initial target on that. And if you are currently long into that, you might be considering having that stop loss below the 17,600 mark. So just sort of trailing that stop loss a little bit tighter now as we move in the right direction. Now, the S&P 500, short-term range, obviously a similar picture to what we see on the Nasdaq here, but longer-term trend clearly up. We've had, rather than a real pullback, we've had a bit more of a sideways consolidation. I generally view that if the market's correcting in a sideways fashion rather than pulling back, it does show against that market. So it does still looking pretty bullish at this point in time. If you're range trading, you might have tried to pick it up close towards that 4,935 mark, that level of support there. Not really such a clear signal. I think the next long entry opportunity might be if we do get a break of that 5. I'm just using these upward trend line resistance as targets. If we do get that scenario manifesting, we start looking towards about 5,115 as an initial target. Now, if we do get that upside breakout, then you need to consider where to put your stop. And that could be below a one-day low, or maybe the midpoint of this short-term range that we see. Now, looking at the Germany 40 or the DAX 40, this one's worked out very, very nicely relative to our last bit of commentary last week on it. We talked about this range-bound environment, waiting for a breakout. We'd had sort of a tentative break at that stage. We've taken the height of that consolidation to project a target at 17,360, and the market has rallied directly to that level and finding some resistance on what is just a level. It's just a projected level from that consolidation. So the theory around proportionate moves is working out relatively well. If you are looking at things like Fibonacci to project further targets, which especially when we move into new high territory, is something to consider. Then that further target there, that 61.8% projection there, is sitting at 17,828 odd. Now, we have also moved into overbought territory, and it's quite tricky buying a market that is trading into new high territory. And so my preference always when we have upside breakouts and strong moves up is to buy into the first pullback from that move. So my preference would not be to, if not in the market, I think if you're in the market, you could be considering trailing that stop below a close, using a close below a one-day low. If you're looking for new entries into that market, so then for me, I'd be waiting for a bit of a pullback from overbought territory. That longer-term trend is affirmed as up, and so not looking at picking tops or shorting that market yet. But if we do expect a bit of weakness, waiting for that weakness to play out, and then picking up that particular market. Now, FTSE 100, very, very different picture to what we've seen. On the DAX now, we have been talking about this for quite some time, this range-bound price environment on the FTSE 100, and has conformed quite nicely to our levels. Last week, we did talk about this. There was a bullish reversal, but it wasn't close enough to support, and it was quite a big body candle. So a bit of a hard one to trade. So if you were trading that reversal, your stop loss would have been fairly distant from your actual entry price. But nonetheless, that was a reversal. We'll just circle that in. It was above the level that we were hoping to get it from, that 7,410. But it has manifested and has worked in terms of seeing the price rally towards resistance. And we had that range there, 7,700 to 7,745. And then from that now, contrary to what we are seeing in the US markets and on that DAX, we do have a bearish price reversal at resistance. So this is, we started off with a bit of a doji spinning top type formation at the top, that red candle in the middle of these circled candles. But you put the three together, you've got a bit of an evening star type formation. So suggesting the price has now reversed from resistance. When that reversal is accompanied by a move out of overbought territory, so suggesting some short-term weakness. And so again, we are still looking for a move towards that 7,410 mark, which is quite low. If you're looking for a more conservative target, you could probably look at somewhere about that 7,590 mark odd as an initial target. And of course, the market does start to move in the correct direction. And you could always look at trailing a stop loss. Initial stop from here, depending on your threshold for risk, maybe on a close above that 7,700 mark. If you want to have it a little bit wider, close above that 7,745 mark. But there is a bearish reversal in play on the FTSE, and that is supported by an overbought signal right now. So moving over to some commodities. Looking at Brent crude first. Now, range-bound trading environment, we've had some momentum to the upside that has petered out. The price has started to find resistance around that 82.18 mark. So just where this dotted trend line is, and we are consolidating around there. Now, we are also sitting in overbought territory at this point in time. But I think there's no real conviction in either direction because we are moving sideways in a relatively tight range. So for me, looking for next opportunity, just identify what we are sitting here with, which is this little bit of a range here. We did look like we were reversing recently. That range sitting about 83.20 down to about 81.05. So looking for a close above for an upside breakout or a close below for a downside breakout. I think if we do get an upside breakout, find resistance a little bit close here at about 84.30. So I think maybe you want to see the market clear that level before we start targeting a move towards 88.30. Inversely, if we did get a downside break from this close below the support at about $81 per barrel, that could constitute a short-term reversal of this move higher. And it would correlate and maybe feel a little bit more comfortable with this overbought signal and start targeting a move lower. So at the moment, Brent crude looks like it's a short-term consolidation and a fairly tight one, hard range to trade because it is quite tight. So we'd be looking for a breakout. You're looking for a close above that 83.20, an upside breakout, or a close below that 81 odd level for a downside breakout. Now looking at spot gold. Spot gold broke support, failed to reach that downside target of 1,970. dollars per ounce. It produced a nice reversal. So I think if you were trading that breakout, that probably would have been a signal to stop out. But if you had your stop above that 2010 mark, we did get a close above there. So you would have looked at closing on that as well. And we are starting to see some gains. I think we're in a bit of no man's land right now. I think that we have affirmed that short to medium term trend as sideways. And so we're looking at how that market handles each levels. Last few opportunities, the ones that have been quite good, have been bearish reversals close towards that $2,060 per ounce mark. And we've had a nice bullish reversal, but we're probably going to have to adjust our levels a little bit here. What does make me a little bit nervous about the rally and sort of reluctant to get too long at this stage is that obviously we know we have an inverse correlation with the US dollar, so we want to see how that dollar is playing out. And if that dollar does start to strengthen, we'd see this start to break. When we looked at the dollar, we were talking about that sort of possible dollar index, possible bullish flag. Well, this could be a bit of a bearish flag as a function of that preceding move. So I think really just watching that, I might consider short if we start seeing a close below that flag. And obviously, because it would most likely correlate with that dollar breaking to the upside on that flag. But certainly, well, no man's land at this point in time, one to watch. And I think probably best opportunities closer to some of the outer levels here, 1970 to $2,060 per ounce. Still in the commodity space, spot platinum. Now, platinum, broad range-bound trading environment, has been conforming relatively well to our levels. That last reversal off that 875, we're always looking for a target back towards about that 940. That seems to have been a nice target previously. Does look to be petering out. We've had a move up and I had a first pullback. So I think if you were long, you probably would have been stopped out more or less at break even if you looking for new positions. I'd be waiting for that market just to get a little bit closer towards support, that level of support being 875, and looking for the price just to tick back off of that level. And if we do get that, I think we've got a shorter term range here. We probably have a more conservative target on that 915. If we don't get that pullback from where we are now, another consideration for long entry would just be to clear that level, that 915 level, and then start targeting that 940 level as well. Right, that's all the charts from me. Shaun Mearson, Senior Market Analyst at IG South Africa, and thank you very much for watching.